Across to Peter McGuire as well, who better than him, who understands what's happening in commodities and take a sense of what's really going on. Peter, hi, morning. Equity markets aside, lots happening within commodity universe. First, I want to talk about what's going on with the precious metals. The fact that gold has crashed about 5% overnight, silver has dived about 13%. Is this a trend change, or would you say that this is just a knee-jerk aberration and some bout of profit-taking which is currently present?
Well, good morning. I think it's a combination of multiple impacts. First off, you've seen that dollar bounce quite considerably. You've seen margins increase across exchanges, and the natural part as far as Russia announcing a virus vaccine. So that's put a level of taken the wind out of the sails. Those previous large frames or large themes are very much here to stay: election, geopolitical, China, US. But at the moment, the wind has been taken out of its sails due to, I think, 2 or 3 key points, and we've got to understand it was very much overbought. So a market that moves up so in a parabolic state, it's having a correction, and it's a sell-off, and I think it'll consolidate maybe a couple of dollars less than what we're at the moment.
Well, Peter, like you said, taking the wind out of the sails, but what does this mean for gold? Because given the other underlying macro factors, experts were predicting an onward march for gold, even with minor setbacks over the next couple of years, in fact. But if we're looking at just even the next few months, do you now see gold moderating, profit booking? Is there a new range that we're looking at, or do you just see this as a temporary correction?
Well, I think it's just a temporary correction, Abba, and I feel as though there's a couple of points to that. First off, markets don't always go up in a straight line. We know that. If you put your mind back to how oil's moved over the last matter of a couple of months, it's had big swings up and down. The same with gold. It was being one-way traffic from really the middle or the latter part of March. We had 4 months of explosive moves to the upside from nearly 1,500 to 2,100. So it gets to a point, it exhausts, profit-taking comes in. US dollar also had a massive sell-off. It's bounced nearly 1.5% from those lows of only a week and a half ago. So there's the other part, margin requirements. Speculators are looking probably a time overbought, profit from it falling, and take a deep breath and let's see where we go from here.
Peter, if I really look at the patterns for gold, silver, for that matter, any commodity, when the bull run starts, the bull run will last for not days, months, but it will last for years. So can I say that the bull run for silver and gold has just about started, and there is every reason to believe that this is going to be a trend for next couple of, not days, quarters, but couple of years?
I think so. If Trump is re-elected, I think that it's going to be a very, very volatile market, and gold will be pushed to the considerably a lot higher than where we are from here if he really keeps up that framework as far as China and what his accusations are, what he terms the China virus, all of these forced technology transfers, the issues with Hong Kong, Taiwan. So that's, and of course South China Sea. So I think that I don't think Trump's going to back down, and that's only going to add more to the gold story. If Biden is elected, I think it'll knock some wind out of its sails, but gold will still trend higher. But I feel as though that US dollar will come under some more pressure to the downside as far as the index, and possibly its new home's going to be closer to 90 than what it is at 100.
All right, Peter, thanks so much for joining us this morning, clarifying some of the logic behind what we're seeing on gold today.